Glenn, working with a lot of first home buyers and even often our second home buyers,
Yep.
I'm getting more and more inquiries around guarantor loans.
Yep.
For the listeners here, do you want to explain what actually is a guarantor loan?
Yep.
And then what are the actual benefits to a client?
Sure. So I guess even going a step back in terms of why a bank might need a guarantor, and then obviously I'll explain what they are. But banks essentially require you to have a 20% deposit as their preference. You can borrow up to 80% of the value of a property without lender's mortgage insurance. Otherwise, they'll lend you go up to 95 with lender's mortgage insurance. So bringing a guarantor on board helps borrowers, and in particular first home borrowers, to avoid the lender's mortgage insurance if they haven't got the full 20%. So what the banks will do is that they will take mum and dad's property as additional security, and that allows them to lend a little bit more and they're still protected.
Are you seeing this happen though more with the first home buyers, even though with all the government subsidies they're able to get, so 95% no lender's mortgage insurance, has that changed the climate for guarantor loans?
Yeah, it definitely has. I'm probably going the other way. I'm seeing a few less guarantor loans because at the moment people can purchase up to $800,000 and with only a 5% deposit, the government can effectively be the guarantor.
Yes.
So that's the first home guarantee scheme. It takes away the need for parents, which is generally a positive for the children that are borrowing. They don't need to get the family involved in the finance side of things. If they're going to purchase for over the $800,000, which is the current cap, that's when the parents need to come on board and assist with helping out being a guarantor.
And I guess too, if you're a first home buyer going up to that $800,000 mark, even though you may only need 5%, say $40,000 as a deposit, you're paying full stamp duty at that point.
Correct.
So add almost another $45,000, so you need $85,000.
Spot on.
As a first home buyer, that can be quite difficult.
Yeah.
Using a guarantor then, correct me if I'm right here, is that, hey, you may only need the $40,000.
Correct. And there's a couple of banks out there that'll actually lend 100% of the purchase price plus up to another 5% for the stamps. So
in that circumstance, what are the benefits for actually doing that?
Yeah, so I mean, people are getting in without any savings, essentially. They may have had to reduce personal debt. They might have been, over the last 6 or 12 months on a pretty aggressive debt reduction strategy, and they haven't had the ability to save. They could be renters at the moment, and again, bit of a challenge with regards to the saving side of things. So in that example, they can borrow 100% plus the costs. Obviously, the guarantors are in it for a little bit longer as well, but it allows them to get into the ownership a little bit sooner.
Can a guarantor be used for an investor?
In certain instances, yes, they can. So there are a couple of banks out there, but it is restricted. So not every bank will do it. The preference is for the banks to allow people to get into their first home or at least an owner-occupied property.
So if you're explaining to me now as if I don't know anything about it, what's the process? What does the guarantor, what's their situation need to be if someone wants to help out their children buy a house?
Sure. So again, it varies from bank to bank. And one of the benefits of coming to see us is that we know each of the lender's policies and why and where and how they're going to fit. So one lender, for example, just needs mum and dad to own property. They can be retired. So there's no restrictions or requirements for mum and dad to be able to make any repayments or cover a guarantee portion. It's literally just the bank will take your property and away we go, which is clearly quite loose. A number of the other banks will want to make sure that mum and dad are still working. The portion above the 80%, so effectively what mum and dad are guaranteeing, that they can be able to service that loan if it does go bad. And then I guess depending on structure as well, some of the banks will actually borrow 80% against the children's property. And then the remainder, they'll bring mum and dad's property in as well. And that's a really good outcome in that the parents can see and they've got a bit more visibility, same with the children, as to what the guarantee is. How quickly can we get mum and dad off it, etc.
So I guess doing that way, they can actually focus heavily on the extra repayments to eliminate the guarantor portion.
Correct. Yep.
So what has to happen once someone's gone as a guarantor? What needs to take place for them to be then removed? Because sometimes I might hear, oh, but once I'm a guarantor for life. That's not the case, is it?
No, not at all. So clearly the loan contracts are drawn up for 25 or 30 years. And because of the situation currently, the guarantors are involved. So the perception could be, yes, I'm in it for 30 years, but that's not the case. Essentially, what we just need to do is get the LVR, the loan to value ratio, down to 80%. and then we can release mum and dad. So that happens by either bringing the loan down, clients making their repayments and hopefully extra repayments, the property appreciating in value, and that gap then becoming 20%. So
That's good.
When that's getting close, obviously we work with our clients. We can order valuations with each of the banks as well. And as we know, with valuations, they can fluctuate a little bit. So depending on timeframes, you get one that shows they're at 80%, and then thanks mum and dad, and we can release them.
Yeah. So it's good. I mean, I'm working with a client right now. This is going to be their second home they're buying. So they're going to keep their existing as an investment property, and then they would lever up quite high on their new purchase. Having that deposit would be too significant. So their parents are going to go guarantor for them on their second property, which is another thing that often I think a lot of people don't realize is not as always the first property that guarantor is going to help.
Definitely the most common situation, but not always the only option. As we talked about investors before, people that are upsizing as well, certainly option for that.
So is it fair to say if someone's looking to buy it for over $800,000, the best option, if possible, is to consider going down the guarantor path?
Yeah, if possible, certainly. And the reason behind that is that I guess we avoid the lender's mortgage insurance, which has sort of two implications. One of them is it's an upfront cost. Depending on how far or how much of a deposit you've got. If you're at 81 or 82%, the mortgage insurance might only be a couple of grand. So you may not look at it because of the setup costs, the legal requirements for advice for the parents, and then maybe refinancing in the future. That might be a couple of grand over the course of the loan. If someone's borrowing 90 or 95%, the lender's mortgage insurance could be $20,000, $30,000, $40,000. So yes, with a family guarantor, a family pledge, that would absolutely be a better option.
And they also don't think there's a large deposit.
Yeah, correct. Exactly right. They can get into the property price, into the property market sooner by not having as huge a deposit. And the other part too is that the pricing, so your interest rate is going to be based on an 80% lend. The bank recognise that there's less risk, and so they price it at 80% as opposed to a higher risk. Even though you still pay the mortgage insurance premium, they bump up the interest rate as well. So it's a little bit cheaper from that point of view.
Good. So if someone wants to know more, how do they contact you, for instance, to find out more about, hey, is this the right solution for them?
Yeah, definitely reach out. Obviously, all our contact details, send us a DM, contact us. One thing that we haven't spoken about is who can be a guarantor as well. So the banks, again, have got restrictions in terms of immediate family members. We can't have friends, we can't have work colleagues, we can't have bosses, we can't have your cricket or footy coach or something like that. It's got to be immediate family members. So mum and dad, grandparents are possible, but again, we need to double check with all the banks. Even aunts and uncles, banks are a little bit cautious on that. So the preference is definitely parents, but any questions, make sure you reach out to us.
That's really good. Thanks, Glenn.